Today we are talking about understanding risk tolerance categories in investing. Risk tolerance refers to an individual's ability and willingness to withstand fluctuations in the value of their investments. It's a crucial factor in determining the appropriate investment strategy and asset allocation that suits your comfort level and financial goals. Risk tolerance is often categorized into different levels, each reflecting a distinct approach to handling investment risk. Here are the common risk tolerance categories. Conservative. Characteristics. Conservative investors prioritize capital preservation and are averse to significant risk. They prefer stable and lower-risk investments. Investment choices. Conservative investors tend to favor assets such as high-quality bonds, certificates of deposit, CDs, and dividend-paying stocks. They may allocate a larger portion of their portfolio to fixed-income securities. Goal. Capital preservation and steady income are primary objectives for conservative investors. Moderate. Characteristics. Moderate risk-tolerant investors seek a balanced approach between growth and security. They are willing to accept some level of risk for potential returns. Investment choices. Moderate investors typically have a diversified portfolio that includes a mix of stocks, bonds, and possibly other assets like real estate or alternative investments. Goal. Achieving moderate growth while maintaining a reasonable level of risk. Balanced or balanced growth. Characteristics. Balanced investors are comfortable with a higher degree of risk to achieve significant growth potential. They are willing to tolerate market fluctuations for potential long-term gains. Investment choices. Balanced portfolios often include a larger allocation to stocks, both domestic and international, while still maintaining exposure to bonds and other assets. Goal. Balanced growth with a mix of capital appreciation and income. Aggressive. Characteristics. Aggressive investors are comfortable with substantial risk in pursuit of high returns. They are willing to endure significant market volatility for the potential of above-average gains. Investment choices. Aggressive investors primarily focus on equities, including growth stocks, small-cap stocks, and emerging market stocks. They might have a minimal allocation to bonds. Goal. Maximize long-term growth potential, even if it involves higher levels of risk. Speculative, high-risk tolerance. Characteristics. Speculative investors are extremely risk-tolerant and are comfortable with highly speculative and volatile investments. Investment choices. Speculative investments can include highly volatile stocks, cryptocurrencies, leveraged ETFs, and other high-risk assets. Goal. Pursue potentially high rewards, often with a willingness to accept substantial losses. Determining your risk tolerance. Assessing your risk tolerance involves considering your financial goals, investment knowledge, emotional resilience, time horizon, and willingness to handle market fluctuations. It's crucial to choose a risk tolerance category that aligns with your comfort level, financial objectives, and capacity to endure potential losses. Review and adjust. Your risk tolerance might evolve over time due to changes in your financial situation, life circumstances, or market conditions. Regularly reassessing your risk tolerance helps ensure that your investment strategy remains in line with your goals and comfort level. Conclusion. Understanding risk tolerance categories empowers you to make investment decisions that resonate with your personal preferences and financial aspirations. By choosing a risk tolerance level that suits your individual circumstances, you can create an investment portfolio that balances the potential for returns with your capacity to manage and tolerate risk. Thanks for watching, and don't forget to like, share, and subscribe.